Have you ever seen commercials for life insurance and wonder what the actual benefits of such policies might be? Well, in this video, we're going to be discussing a few basics about life insurance, including 3 big things you need to know. Hey everyone, this is Kyle from Money at 30, and on this channel we look at personal finance from a millennial perspective, including money tip videos like this one. Life insurance is one of those uncomfortable topics that most people don't really like to talk about. Because of this, there's a good chance you don't even fully understand how life insurance policies work or why they might be a good investment for your growing family. With that in mind, let's take a look at 3 big things you need to know about life insurance, including the difference between term and whole life policies. The first thing we're going to be looking at is what term life insurance is and what some of the pros and cons are of such policies. As the name implies, term life insurance policies are those that expire after a certain period of time. For example, most term life policies are between 2 and 30 years in length. Put simply, if you were to pass away while your policy was active, barring a few exceptions, your beneficiaries would receive whatever payout you selected when purchasing your plan. In the not-so-unfortunate event that you don't die in the set time frame, your policy ends and no payout is received. The downside of term life policies is that you might end up paying a monthly premium and receiving no monetary benefit. Then again, considering that you won't be around to take advantage of any payout regardless, maybe it's not such a bad thing after all. On the bright side, term life policies tend to be much more affordable than whole life, with some plans starting at just a few dollars a month. Because of this, whether you have young kids you want to make sure have money for college, have debts you wouldn't want to saddle your spouse with, or want to ensure your family isn't struggling to replace your income, a term life policy might be right for you. Next up, the other main type of life insurance policy is called permanent life insurance, which includes whole life insurance. Compared to term life policies, whole life insurance can be a lot more complicated. The basic idea is that your coverage has no expiration date, ensuring that a payout will be made to your beneficiaries regardless of when you pass away. However, whole life policies also contain a savings component that not only makes the policies a bit more confusing, but also makes premiums far more expensive. Since term life policies expire and may not be available to those over a certain age, the pitch for whole life coverage is that you can lock in rates early and ensure continued coverage until, well, you know. They can also benefit those whose heirs might be subjected to estate taxes, as death benefit payouts are tax-free. However, while the cash value of a whole life policy may grow over the years and can be borrowed against, only the face value of a policy is paid out upon death and not the cash value. Furthermore, any outstanding loans on a policy at the time of death can be deducted from the payout. Thus, there are those like Dave Ramsey who have said that whole life policies aren't a good investment. But that's really up to you. Finally, regardless of whether you choose a term life or whole life policy, it's important to consider how much coverage you should purchase. A commonly cited equation for determining your life insurance coverage is to multiply your income by 10 or 12 times. So, if you make $50,000 a year, you'd want a policy of at least $500,000 to $600,000. However, there's also the dime method of calculating your coverage, which includes debt, income, mortgage, and education. In other words, this suggests that you should not only purchase a policy that's 10 times your income, but also factors in debts you may have, including your mortgage, as well as the costs associated with sending your children through college. Similarly, for policies involving stay-at-home parents or the like, you'll want to consider coverage that factors in the cost of any necessary childcare or of leaving your job to help out at home. Ultimately, it's about finding a balance between having an affordable monthly premium and ensuring that your coverage will get your family through tough financial times in your absence. Hopefully this gives you a basic overview of what life insurance policies are all about, but for a deeper dive on the subject, I'll have a link to my article on moneyak30.com in the description box down below. Also, if you like this video, please hit the thumbs up button, leave a comment, and be sure to subscribe because we have new videos every week. So thanks again for watching, and I will see you next time here on Money at 30.